Hey traders, how we doing out there? Good afternoon. Welcome to the Ask an Analyst session. It is Monday, the 10th of August. Let's go ahead and get started. If you're out there, type in a Y or yes, or you can see it. There we go. All right. Hey, we've got Joe in the house. We have Terrence in the house. Gert, what's happening? Denise, hello. Martin, Doug, John, Austin, Cheyenne, Dorota, what's happening, everybody? Scott, what's up, man? Okay, looks like everything's coming through loud and clear. We've got the dollar yen up on the chart. Let's begin. Let me move over my little drawing tool there. And let me make sure this will work. Okay, I'm going to switch this up. Okay, so let me move my little pen tool out of the way. And let's begin. All right, we have a lot to discuss today. For the Ask an Analyst segment, feel free to ask some questions if you wish. Just type it in the chat here for the stream, and I will take a look. I've got it just above my charts are the YouTube stuff, so if you have any questions, let me know. First question that popped up is what I was going to talk about, gold. I did publish my weekly outlook for my YouTube channel. Make sure for the Ask an Analyst YouTube channel, our Market Traders Institute YouTube channel, that if you're watching these videos and you're taking a look at this, make sure you subscribe to the channel, click the notification bell, give us a thumbs up for the video if you like the content. Let's talk gold. I do want to come back to the dollar yen and a couple of yen pairs. This just goes with what I talked about for my weekly outlook. So XAU USD, let's take a look on the weekly chart. I did read that gold has kind of lost its momentum, which, I mean, look, we just blew through. From this breakout at 1750, we just went straight up to those highs in 2012 at 1912, right? So we had the 2011 highs at just over $1,900, and we just busted right through those areas. Now, is this, continuation for gold? I don't think so. From a technical standpoint, it's hard for me to justify getting long at historical highs. The same way it'd be hard for me to get short at historical lows. Now, yes, gold can certainly go higher. If you're wondering, from a technical standpoint, what do we want to do with this? Well, let's take a look at just some really simple stuff. There's a trend line in gold, right? Now, I would say that if we get a more aggressive trend line in here, then we're looking to see, okay, do we break the inner trend line, go to the outer trend line, or what price pattern, what price action do we have right around this 2000 high? I will say this. If you take a look at the weekly chart, one thing you're going to help reduce is a lot of the market noise on a higher time frame. So if we are going to take a look at the weekly chart, look at how gold has made this last run. Now, this goes back to a very similar time in 2011 when gold just took off. We went 2011 all the way up to 2000. What was this? July to, wow, that was only a couple of months. And 2011 was not an election year. But we had a really, that's kind of the last time I've seen a movement that was similar to that. Just a 2 to 3 month movement that was just really, really bullish, very inefficient. And the same thing that happened here. Look, if you want to highlight a spot, look at right here. Can everybody see that candle? This is back in 2011. That weekly candle right there ended up being a pocket, a really nice inefficiency. And we went all the way up really aggressively, came all the way back down to fill it. Okay? So I would suspect that going into current times that we would see something similar to that. Where, and look, I'm not calling the top. All right? I'm not calling the top on gold. However, look at this candle. This runaway candle right here. So what this means for me is if we are going to see a stall, if we're going to see some topping evidence, right? This would be where I'm looking to take gold back down. So what I would like to see is if we can spot some price action on gold that suggests something like this. Maybe this creeps up, excuse me, a little bit higher, starts to stall, and starts to give us some nice rising wedge structure that we can short this back down. And all this run to the upside means profit taking. All this run to the upside mean that the bears might be interested in starting to sell as the bears take profit. And this just becomes a big move to the upside with a pullback. Okay, and again, from wave patterns or even Fibonacci retracements, if we look at this low from March to the high right there, even if we just have a pullback, something as small as a 236, something as small as the 382, that 382 happens to sit right there at that weekly pivot, or that weekly pocket, yeah? So I will be looking for some evidence to look to short gold and see it come back down into a Fibonacci level. All right, now the preference, of course, is that we either get it at the high or slightly higher highs. Look for confirmation and sell. Okay, one way you could trade gold is you could also buy puts, right? You could buy puts if you want direction. There is, limited downside with unlimited upside if you're looking at options in gold. Okay, you can also, if you buy the instrument, you might have to look at, if you had a margin account, you could short GLD. If there are ways to trade, other instruments gold related, I know there's lots of spin-offs and ETFs, but again, I think directionally, if gold is going to fall, we will likely see a little bit of a resurgence in the dollar and the yen and some of those, risk-off currency pairs getting a bit stronger. Okay, so gold it really has been a strange story. It's like, some of the explanations are that gold is serving as a hedge as everyone's moving away from dollars and trying to park their money in equities. But also it's like there's a risk on need to put your money into markets that you're getting yield. It's like right now the equities world is the only dividends and yields that the market's actually producing, right? You put your money in a bank, you essentially have 0% interest. Okay, so it's not really a safe place as far as letting your money work for you to just park it in banks. So gold is serving as like, okay, I'm going to put my money in risk. I'm going to put my money in the equities market, but I'm also going to put my money in gold as a hedge, right? So, gold has had a huge run since this drop in March, but yet we have this dip in March, this huge rally in gold, while also seeing a huge rally in the stock market. So it is a very odd correlation. That's a good question. Denise says, how do you determine a real breakout versus a false breakout? I've been caught before on false breakouts. That's a good question. So let's spend some time on this with gold. All right, so I'll zoom in on here. So let's go gold and let's go to the daily chart. That's a good question, Denise. So let's go to this. Now, like I said, I'm kind of I'm guesstimating right now that this is our swing from low to high. Okay, so that's our swing from low to high. What I'd be looking for, without some type of trend line break, something like this. I think that right now it's like we're too early to call the top. Now, again, I could be wrong, and this might be something I completely miss out on. But if we have, this kind of low in price, low in price, low in price, I could follow those fractal lows. I could see if we have price coming back down and taking out a low that we set up a little bit of a reversal pattern. So if we have a reversal pattern, it's not really a false breakout. It's like we're just at highs. And I think that as we break historical highs, it'd be one thing, in my opinion, if we broke highs in gold, like we broke that 1900 high, if we broke it and then just kind of still balanced and stayed bullish, but when it broke like really violently and really viciously and left all these weekly candles up, up and away, where it's like that's not an efficient move. Every time that I see a rocket type movement, we typically see it fall, right? We saw the same thing in Bitcoin. We saw the same thing in Tesla. Okay, now Tesla's hanging around like $1,500, $1,600, but it's like we still have all of that craziness from $1,000. Now it's interesting to see, Tesla's not nearly as newsworthy as it was, a month or two ago, right? But Toyota, automaker wise, it's like it's still the big fight. Is the value of Tesla really warranted or justified? But I'm just looking at the chart. If it runs away like this, I feel like the inefficiencies will ultimately balance. I think there is a decent amount of liquidity and volume in gold, especially right now. If there wasn't, then you would have never seen this run in the first place. Okay, but what I'm looking for is, as far as calling a top, what I'm looking for is evidence. So we have this low, we have this low. If it goes up and establishes one more low, just have a more aggressive trend line. Look and see if price takes out that low. Then you have a stop area above at least a U-turn. And then we can look at shorting that back down into that 382 or that pocket zone on the weekly chart. So, with a false breakout, Denise, actually, I'll take this one step further with false breakouts. Let's go to the Qs. Okay, the QQQ, which is the ETF for the Nasdaq. I was talking about this morning in my weekly outlook. that I really think that right now the Nasdaq might just continue to churn higher. So let me get the chart up here to the daily chart. Yeah, let's go to the daily chart. That's fine. So let's go daily chart on the Nasdaq, and let's draw our channel bottoms here. So we have a nice trend line to the upside. We can see here that the market's been making higher lows the entire time. I can copy and paste that line, put that as a channel high. And, you know, we had a 60+% rally on a major index off the lows from March, and we took out that February high right here. Okay? Now, I would say this. This will continue to stay bullish as long as we see these dips on the channel trend line. So that means that if the market is going to drop to this channel low, you see a long wick to the south, a long wick to the south, a long wick to the south, a bullish engulfing candle or a piercing line, a long wick to the south, bullish engulfing candles. Okay? So, I mean, if we have candlestick evidence off of these lows, again, all you're looking at is the close of the candles. So if we have a long wick to the south, then we're probably looking to buy that dip. And I would say, you know, the false breakout would be this. If we have a dip and we go back up towards the highs, but we can't break the highs, then we're probably looking at this thing starting to top out and go sideways. Okay? But as far as the false breakout, I mean, the way that I know of a false breakout is we have resistance here, we have support here. Now, a false breakout is this. We break out, okay, and we retest, but rather than bouncing off the retest, instead we do this. We might come back and we break out, stall, and then we close back inside the range. So if you're looking at a breakout level, you know, we break above the high, and the reality is we may not know that it's a false breakout, right? I mean, what we do is we see the breakout. We might be looking for the break, the retest to buy, and then we go. But on that retest, if we have, you know, price coming back in and closing, and I'd say just as simple as the daily chart, if a daily chart pushes price back into that range, then I would say I would categorize that as a false breakout. And so the reality is that's going to be a small loss. I mean, if you're looking at buying the dip or buying the retest and you get filled right there and price proceeds to close lower, if it looks like I have here on the left-hand side where it's back inside the range, that would be a false breakout. Okay, if I draw that again, let's go to the downside. If I draw that again where we're you know, looking to see does support resistance break. So we have a break here, okay? And then price retests, goes back down to the lows, closes back inside. That's a false breakout. It can happen, right? I mean, we've seen the yens do it. The yen's probably going to do it more. It's not the last time. But it's like, you know, just be ready. And the reality is it's going to be the small losses. We're going to take really small losses. If we're disciplined, we're looking at something like this. If we tried to sell it here and it didn't work, by the time we close back in, we're taking a small loss right there and we reassess. We can still get back in and participate. Now this could be a swing to the upside with our stop area below that U-turn. So we, you know, lick our wounds with a small loss, get back in, participate with confirmation, and see this run back to the upside, right? If we did it from the high side where it came back in, we would stop out of that little buy trade, you know, reassess the trade, look at our structure, have a stop loss above the swing, and then try to take this back down to the range levels. So this actually leads me to another good currency pair. I talked about this again in my video today. I think this is a great currency pair to watch for the next couple of days, for this week, for even the next couple of weeks. Okay, I'm a big believer, and we've talked about this with Gary and Tyson and myself, that going into August, usually August equals transition. Okay, I think that August is a really important transition month. So we have gone from, you know, this big push to the upside from April, May, June, established a high back in June, sold back off very abruptly. But if you look left on this chart, there's a major resistance level way up here, and there's a major support level way down here at the bottom. Okay? Now, there are obviously intermediate levels that price is going to have to go find. So this is one that I'm watching. Okay? What I did is I have this box around the CAD yen. All you have to do, this is going to be my setup for the CAD yen. If you watch this candle or these candles every day at the end of the day, and you look to see where price closes higher, closes lower, that's the next trade. So right now, here is the CAD yen. If we break higher, okay, if we break higher, I'm looking for that to be a break, retest, go. We go to that level, we go to this level, we go to this level. There's room for the bulls to run, okay? Now, as Denise said, what if it's a false breakout? Well, we already had two of them. We had a false breakout right here. We had a false breakout right here. All it meant for us in the trading room, I mean the flex trading room, what we traded is we had a smaller time frame deployed to buy and sell. And so what we did is we actually said, you know what, we're willing to take a small loss if we're wrong, but if we're right, let's get the right direction. So we took a buy trade here on this breakout, and I'll change this line because it was actually a legitimate daily candle. So if I go over to these highs earlier, if we're looking at this in real time, okay, as we watch this unfold, this is what happened. So traders, you know, we identified the support resistance level. There's your breakout. Like that's all the evidence you need. That's a daily candle breaking above the highs. Cool. Let's take the buy trade. We take a buy trade. We're trying to trade it back to this previous high. That's about 180 pips higher. That's a good point for those bulls to go after. Well, we turned on a 5-minute chart. We took a buy trade. It ended up getting stopped out right there for minus 40 pips. But then it confirmed a sell direction on that 5-minute chart and proceeded to go down over 100 pips of profit, right back to the lows of support. And then take a look over here. We bounce off the lows. We come back to the highs. And we're currently sitting right here. So we had, excuse me, we had a false breakout on both sides. There was a false breakout by the bulls, but we ended up making some profit on the way down. There was a false breakout by the bears, and we ended up going on the way back up. So fast forward to now, look, I'm just going to make a small adjustment and say, you know what? I clearly see that the bulls and bears are playing a little bit of games with these highs and lows. So let's stretch that yellow box a little bit higher, a little bit lower to now these new candle closes. Now, again, it's the same situation. If the bulls close higher, if we close higher, I'm looking to see, can we actually continue this run? There's a point for the bulls, and then look left and find further highs that are higher up, right? So let me zoom out and let's see those levels. I have them highlighted. We could go way up here towards 84.50. First stop would be this, you know, obvious June high right there. So can we break out and go 150 to 200 pips to the upside? Absolutely. Can we break to the downside and fall back to these previous levels of intermediate support back here? Absolutely. Right? You see that we have resistance there intermediately, support right here, and then you look at the larger swing, major resistance, major support. So the reason I like this currency pair is we might be staring at this chart right now thinking there's nothing to do. And you're right. Like there's really not much to do if you're looking for a big breakout trade. But when this trade breaks out, I think that this is going to be a gauge for us to use for a couple of things. I think this will give us the risk on, risk off tone. So what is happening if we see this currency pair, okay, if we see this currency pair going to the upside, what direction is that? Right? What direction is that? If we go and we break bullish and stay bullish, we're going to see a risk on environment. Okay, in fact, let me color code this a little bit differently so it's so it looks good. Looks good. If we break to the upside, that's going to be risk on. If we break to the downside, that's going to be risk off. Okay, and I think that will translate into other currency pairs. I think that'll translate into other Japanese yen pairs. I think we'll see the Aussie yen, the dollar yen, the euro yen, maybe the pound yen, the New Zealand yen. I think we might have the entire yen basket lining up for something pretty clean. So surprisingly, today, I was looking at, you know, risk on versus risk off trades and setups and how the Japanese yen is aligning with this. And I think this is a really good currency pair to watch. So consider the CAD yen as our main gauge, right? Like it's a good barometer to see what's our environment. Is it risk on? Is it risk off? Okay. So I'm going to keep a close eye on this. And like I said, the easy way to do this right now is if you're not, you know, if you're not seeing confirmation above or below, then there's no trade, right? There's no trade. So what we'll do is we'll wait for a daily candle to close higher or a daily candle to close lower, and we will then deploy. So where do we deploy a system? We're going to deploy systems here once we break above with confirmation, and we're going to deploy systems here once we break below with confirmation. So if we have a clean break, deploy bullish, let it go. Deploy bearish, let it go. Now what we did in the last couple of months is we deployed bullish and bearish. So what we did is, for example, the system was right trader max, and we turned it on to buy and sell. Because if we stayed within this range, which I'm certainly happy that we did this, it took a small buy trade with 5-minute confirmation. We got it. We got the buy zone. However, it just reversed on us. So we took like a 40 pip loss and then ended up making like 90 pips to the downside. So we netted a positive pip run in profits, which is fine, but is obviously a little bit tricky. But eventually, this trade's going to go somewhere else. And so as difficult as it might seem to like get this breakout, eventually this currency pair is going to go somewhere else. And I suspect it's going to be somewhere big. So we're looking at intermediate levels. Let me measure this really quickly. We're looking at intermediate levels. You know, breaking to the upside, that is around 200 pips higher. Breaking to the downside, that is about 200 pips lower. So there's a 200 pip breakout one way or the other. If we go up to the previous swing highs back in February, March, that is over almost 500 pips. If we break to the downside to the March lows, that goes back 400 pips. So we're talking, you know, 200 to 400 plus pips of movement, whether we just have a breakout. So, I mean, the market's going to move in waves, but I would suspect that we're going to have higher volatility on the breakout. We're going to have a trend on the breakout. And this trend will likely do something like trends do, which is the trend starts, the trend goes, and the trend gets to an extreme before it bottoms out. The trend starts, the trend goes to an extreme before it tops out. And so if we're going to get another similar environment, let's see this trend break and go until we have the extremes. Break and go till we have the extremes. Make sense? So that's a really good looking trade. I think this is clean. This is what I'm going to be focused on this week in the trading room. All we have to do is look and see where the next big breakout is, and again, follow that daily candle. Okay, next up will be dollar yen, another similar gauge that we can use. So here's dollar yen, and here is what I am watching. I'm just going to highlight that line right there and there. So it's essentially taking a couple of days of price action and saying, okay, here's where I think this dollar yen can go. Look left on your chart. We're always going to use price action. We're always going to look left on our chart. We're going to find where the bulls and bears can go. Right there. Okay, where can the bears go? They can go down here. Where else can the bears go? Look further left. They can go down here. Right? All these levels are critical spots, aren't they? So do you think that the dollar yen is setting up for something bigger than what we see right now? I think it is. I mean, look at this right here. If we break that structure right there, or even this, and this might be a little bit too aggressive. This might be a bit too aggressive, but thinking about how we transition out of August into September, this has to go somewhere. Okay, so this low is back around 101.50 with the major lows back around 100. So a couple of trend lines that I'm watching really closely, you know, inner trend line, outer trend line. I would say this. Okay, now the trend lines might be a little bit more confusing because that gives me kind of the directional bias. Like right here, the trend lines mean that I'm going to buy the break of the trend line. Okay, so I'm going to go ahead and just remove the trend lines for this reason. I think that this dollar yen is capable of going up or down, right? And it would be this. If it goes up, then we're looking for this to go up to this area, possibly up to this area. If we go down to this area. Yes or no? Right? So again, measured movement. We have a high. If we break out, and this would be around 106.50, so I'll put in a note here. If we break above 106.50, right there, or we break below 10400. And I know that I'm not exactly on the number there, but it's 104.15. So if you want to know where the lows were, if we have a daily candle above this high or below that low, those levels I'd be looking for continuation trades. Okay? And the same thing, you know, how do we know if it's not a false breakout? Well, we'd have to trade it. You know, if it breaks to the downside only to come back up, that's a false breakout. We want to be, you know, on the smaller time frames, take the sell trade with confirmation, and then be willing to reverse into a buy trade because it's probably going to be that, you know, that quick little fake out by the bears, a bear trap, if you will, and then the bulls take over. Right? So if we have some breakouts above or below this, I think that the dollar yen is another one that's going to go somewhere. Look at this low. Look at these highs. There's adequate room for this thing to drop. You know, right there, that's around 260 pips. If we come back down to these previous lows, that's over 400 pips, right? Because the lows are around 100. If we go to the upside, we're looking at this run back up to around 109 to 110. That is around 300 pips to the upside. If we come back to this area, that is around 480 to 500 pips. Okay, so we do have some decent space for this thing to run. Now, this is where the yen pairs are tricky, right? Traders sit here and they're, it's like, what is a trader going to do right now? The trader's going to sit here and wonder, like, how do I trade this dollar yen? In my opinion, I don't do anything right now, right? In my opinion, right now, I'm not going to touch this dollar yen until we break above here, break below here. If we break above, let's go to 109. We've already talked about that level in my trade room. 109 is not a hard spot. Okay, if we break below, I might be like reluctantly bearish, but if it goes to 100 or goes to 101 lows for March, I mean, we might as well get something out of that with a smaller time frame precise trade. Okay, but I think that what we had earlier this year with this crazy roller coaster ride is probably set to do something like that again. Okay, so that's interesting. Herb says there's a pocket at 82. I mean, 82.00 is, I mean, that's incredible. I agree that, I mean, there's probably a ton of pockets down here as this is 2012, when the Japanese yen decided to just go bananas to the weak side, right? JPY was super weak. We rallied from 80 all the way up to 100. That's a 2,000 plus pip move on like pretty much all yen. So like all yen pairs are going crazy. Now, yes, that is a pocket. I acknowledge that. However, I would not really even have that in my sights unless the dollar yen could break firmly below 100. This is a psychological level. This is a protected level. The BOJ is very firm at 100. The exchange rate means a lot at 100. That's parity for the dollar and the yen. Okay, so I mean, we'd have to see like an implosion of, or actually we'd have to see just a super high move into risk-off trading where the dollar's still getting crushed and it's all about just risk-off. Like Swiss and yen are just making money hand over fist. The BOJ's like, throwing in the towel, like, we're not going to stop it. We'll deal with it later. We're still going to stick to inflation levels, but the price is just surging to the downside. But if we can't break below 100, there's no way that I'm that bearish. Okay, I think if anything, what we're probably going to see on this dollar yen is something like this. We might just keep, jumping around inside this range. We might have one spike to the downside and then another big rally to the upside. Or vice versa. We might go to the upside first and find this pocket at 109, find these equal highs at 111, and then crash back to the downside. I do think that if you give this currency pair time from now until the end of the year, there's going to be a big move coming. And so, again, how do we prepare for that? Well, as August is a transition month, let's be prepared for something to break above or below. I'll say this. If price isn't above, okay, if it's not above 106.50, if it's not below 104, I have no interest in trading the dollar yen. No interest. Okay? If we break above it, I'm willing to say we're going here, or we might come back down. And I want to deploy a system or strategy that can follow some of that volatility. If we break down here, I'd like to follow that. If it fakes us out, we can follow that. But it has to go somewhere else, right? Like, let the bulls or bears give us some evidence that it's trying to go somewhere else. Because all we have right now is 2 daily candles and a lot of inside candles that are doing nothing. So this isn't really convincing me to take a lot of action, but I would say that if we break above 106.50, we should be able to go to 109, no problem. 109 is right there at 109.60. If it just stays with that momentum, we can go all the way back up there to 111, right? We can recover a lot of that sell-off. I mean, and again, it was balanced. We had that March sell-off. We had the April rally. So it's all balanced. There's a pocket right up there at 109, which I really like, and I think we'll get there. But as I talked about before, I think that if we do this, let me use a trend line here. I think if we set up a trend line break like so, let's see if it just gets a little bit down here. Let's see if it comes back down to retest this low, and then we break and go higher. But the one thing the yen continues to show us is that it needs more than just a technical. And that's why I don't really like the yen sometimes. Sometimes it needs way more than technical. Sometimes it needs to be like news and risk on and risk off. All these things have to snowball into each other and just like get mashed up for the yen to be like, okay, here, now we're going. Now it's a breakout. So that's why I'm a little standoffish on just wanting to trade right now on the JPY. But we break above or below, we get into these open spaces, it's a currency pair that can definitely move. Right? And I think that between that CAD yen and that dollar yen, think of those as your primary currency pairs to watch and see how the basket behaves. Because if the dollar yen, you know, unless it's completely led by the dollar, I don't know if that's going to be the case or not. But if the dollar yen is willing to break here, okay, I wouldn't be surprised if the CAD yen breaks there. I wouldn't be surprised if the Aussie yen maybe drifts a little bit higher, maybe, okay? But I think, again, look at your setups. If it's a clean range, watch for confirmation above or below. Okay? All right, everybody good on that? Those are all good, right? Like CAD yen, dollar yen, really clean sideways levels, and then use those to see how the other yens are doing. If I'm going to prioritize the yen pairs, those are my favorites. I like CAD yen and I like dollar yen. Okay, I also like the CAD yen because that brings on the risk on, risk off. I mean, if we have risk off, we're going to see CAD yen drop a lot. If we see risk on, we're going to see the CAD yen rally a lot. The dollar yen can be a little bit trickier because it's both, you know, risk on, risk off currency pair, right? And really we've seen the dollar and the yen move together a lot this year. So when the dollar is strong, so is the yen. When the dollar is weak, so is the yen. So it's going to be harder for this one to finally separate and have one stronger than the other. Okay, all right, so let's go to another currency pair, Aussie dollar. I'm just going to spend some time on this one. I'll go for maybe another 5 minutes or so. If anybody has any other questions, let me know. Oh, Herb says the CAD yen pocket was at 82. Oh, the CAD yen. Why didn't you say so? Yeah, perfect. Oh, yeah, that's perfect. I love it. Herb just mentioned it was the CAD yen, not the dollar yen. There you go. So that pocket right there is awesome. Yep. Now, how do we get there? Well, what I want to see is, do we break above? If we break above, then I will be aggressively bullish until we hit that pocket, and we can get to that pocket, protect our profit. We can get to that pocket, let our profits run, and see if we can go up any higher to score a point way the heck up there. Right? I mean, let's say that we can get in a trade, eliminate our risk pretty quickly, get into profit, trap some profits. If it just keeps going, let's hopefully put our stops in profit and let it run. Good stuff. Yep, good call. Okay, I'm going to go to the Aussie dollar really quickly. So we did gold, CAD yen, Aussie dollar. I think this one is, again, you just have to pay attention to the technicals. Let's go to the weekly chart. This is what I'm watching primarily on Aussie dollar. We have this big swing to the upside. Okay, so we've broken all this structure here as far as trend line and channels. And, and this may not be like the perfect trend line. Something like this is also fair to say like that's what the dollar or the Aussie dollar is doing. Okay, so I mean, we have this longer trend line here. We've broken the structure. We're bullish right now. I would say that if we just simply did this, we fall back into this support structure. It really is a critical spot for this Aussie dollar. Now, with the last couple of weeks of indecision, a very large weekly swing to the upside. So we have this large swing from low to high right there. Now, the way that this has been drifting, I could see price, and it may not do this, but I could see price drifting a smidge higher into this 18127 zone, and that would be where I would definitely be looking for tops. Okay, so I look for some really hard resistance points up in here, and then see it pull back into this AB boundary. So there's a 236, there's a 382. That's a nice, I would say, even conservative retracement zone. So right now, my trade is selling the Aussie dollar into this retracement zone. I think that this weekly candle, you can see a nice pocket there at 6,700. If you go to the daily chart, you can see a nice daily pocket as well. We have this structure on the Aussie dollar that just doesn't seem to break right now, but it's getting closer, right? If that trend line breaks, I'm definitely more bearish. So as I said, this might find a way to just keep refusing to go lower, maybe drift a little bit higher. But once we get on the right-hand side of this trend line, I'm a seller. And I think we fall back into the 236, the 382. That's a conservative profit level. That gets us back to around 6,700 to around 6,500. I will be totally content taking profits there. Okay. Whoever the original Monday is, you want to see a live account? I don't know what you're talking about, man. Sounds like you're a troll. So you can leave. Okay, you want to see a live account? There you go. So live account, managed positions, lots of trades in. There's my exposure. There's my live trades. You can see it in the upper left-hand corner. There's your live account. So if you're a troll, you can leave. See ya. Okay, so Aussie dollar, if we break the trend line, we're looking to take this down towards 6,700 or lower. If we hit the upside, 18127, I'm looking to sell that zone, get some confirmation on the right-hand side of the trend line. Okay. Any other questions? So that's Aussie dollar. So recap wise today, I mean, we're probably out of time, but look, we started out, we did a little look at the SPY, the Qs, what we're talking about as far as confirmation. If the Qs keep getting bought in the dips and we keep breaking the highs, look, futures right now, if you're in the futures market, you're looking to buy dips and just see if this run continues. I am a little bit concerned going into August and September. My big question that, is being discussed right now, we're going to see it whether we like it or not, but like schools are starting, K through 12, colleges, it's a huge question mark. In fact, I've got some friends that are texting right now about, the football season. Well, Pac-12, Big Ten, well, we have a football season. That is an incredible amount of revenue that major universities may miss out on, right? And may, because it's a question mark, but it's like if you bring on, 20,000, 40,000, 50,000 students and it just becomes a coronavirus cesspool, that is not good, and that is unsafe, and that is ridiculous to have, school in person and have sports. So anyway, if that's the case, that's going to probably spark a lot of uncertainty, a lot more concern, and we might have another, aggressive risk-off sell-off, just like we had back in March. Okay, so that's my concern going into this transition. Could I see dollar getting stronger? Could I see the stock markets dropping as we get out of August and going into September? I could. October is usually a very volatile month and typically not a good performing month for stocks. One thing we talked about last week in my trading room is that the markets do a really good job of forecasting the next, 3, 6, let me see if I can find this. Let me get rid of some of this stuff here. I'm looking for, I had a chart, fudge. It was 3, 6, and 9 months. I'll have to find the screenshot. I'll share it this week in my trading room. It was essentially the market's ability to price in who's going to win the election. So if we have a significant rally like 3, 6, 9 months heading into the election, it usually means that the incumbent, like 3 months into the election or 3 months prior to the election, if we are like 7 to 10% positive, then usually it's the incumbent that wins. So in that case, it'd be President Trump would be, the market's prediction would say that Trump's going to stay in office. If the markets are like, I'd say 3% positive to negative, then we're looking at the markets are trying to price in a change in administration, price in the uncertainty, take some profits. And it's going to be a big deal. Like the election's huge this year. Okay. So as we head into September, October, I expect a little bit more volatility. I will be watching the 2-week daily trading ranges. I think the Aussie dollar, just by the nature of the setup, forget all the fundamentals. Yes, we're going to be talking about them. Yes, we need to be aware of them. But just by sheer technicals, it should be dropping, right? It's like we get on the right-hand side of this trend line. This thing falls. We'll take some profit. If it creeps up a little bit higher, be ready for this to be a resistance level, a fall or a rising wedge. We look for more overbought conditions. Look for confirmation. I'm still going to sell it. So I like this direction minimum, and I'm not asking for this to do a lot. But the reason all this is critical on the Aussie dollar, and this will be the last little discussion for today, the reason all this is critical is because if we can still contain some of this risk on trading, right? Let's see that we have this big run to the upside. We have a little scare, and then we're heading, now it's like election time. Is it going to be this move for the next 6 to 12 months, or is it this move for the next 6 to 12 months? I don't know. And that's what we need to be positioned for. But I do think that regardless of what happens, this Aussie dollar needs to come back to around 67 minimum. If we go up a little bit higher, I'm still going to short the Aussie dollar back to 67. I will just take on a little bit more position. I will still scale my way through it. I'll wait for that trend line to break. I'll look at this resistance zone, and I'll still sell it. Okay, so it's just we have the inefficiencies, we have the pockets, we have the targets, we have all these reasons to make sure that technically it makes sense that it's going to drop towards 6,700 or slightly lower. Okay, so I think that's enough for today. I mean, we're not going to spend, that's what my trading room is for, and that's what our trading rooms is for. So, between myself and Gary and Tyson and any of our webinars here at Market Traders, look, if you like the video and you like this free stuff like this, join us every Monday. It's awesome. We have a lot of fun with this. I know it's just me today, but I thought it was important since we haven't done it the last couple of weeks that, I want to make sure we had a session today. So stay involved. Join us in our webinars this week. Join us in our trading rooms. And keep the comments coming, like the video, subscribe to the channel, get the notifications, and hopefully all of us are back in action, all 3 of us next week on Monday to do this as a team. Okay, but that's it for me. If you have any questions, let us know. Feel free to see us this week in our trade rooms and webinars. Take care, everybody. Happy Monday. And for Ask an Analyst Market Traders Institute, I'm Chris Pulver. Take care. Talk to you soon. Bye.